Hello everyone and welcome to the Peep Show. We are Wednesday, the 11th of March 2020. Sylvain Loganadin with you today for a new analysis session. Today we will analyze the stock market, and the question everyone is basically asking is, when will the stock market recover its losses and how much time will it take? That is a very interesting question, and that makes also a lot of sense because today the stock market is just down nearly 15 to 20% from the last, I would say, all-time high. If you take the last all-time high and you just draw a line and see how much percent we just lost, we lost almost 20%, so 19% right now from the previous highest point we achieved. So my guess on that is market timing is not something that is easily feasible. And even if you ask the most successful investors, no one can really predict when the market will go up or down consistently over time, over a long period of time, and consistently. But you can try to optimize big trends, and for me we are going for 1 or 2 quarter that will be mostly, I would say, bearish. So we will have bearish moves followed by strong rebounds, etc. But no bullish trend for now. So I think that the market will go down, and you can just basically look at the chart of what happened during the last bear markets, etc. We had pretty aggressive down leg, then strong rebounds, then a trading range configuration that lasted for weeks or two, and then the market was going lower and lower and lower, and it took months to recover it. And that's why, to this question, I will answer: when will we reach the previous highest point? I will say minimum 1 year, something like this. We will have to recover. The global economy is going into a recession and is being hit and hurt by what is happening with the coronavirus, but also what is happening on the oil market, and also what is happening also on the geopolitical sphere. We have we have the presidential elections going on in the United States. We don't know yet who will be the president, what can and will happen in November. We have a lot of tensions. The central banks are just cutting their rates across the world to support the global economy that is under heavy pressure. Italy just quarantines the whole country, basically. So we have a lot of tensions, and this is probably something that we will have to monitor for a year. So I think that we are going for a 1 to 1.5 year of consolidation, and maybe then after that consolidation we will see something that will be maybe bullish. But for now, this is not the time. And look at this graphic of the Dow Jones Industrial Average. For now, we have something like this. So market is bearish. We can maybe stabilize here, have a trading range, go back to the 27,000 points, something like this level, and then fall back again. So let's see what will happen. If you look at for example, let me show you the euro against the US dollar. This is an example of, or even look at the rates. Okay, let's look at the bonds market. So I'll say US 30. So basically, those are the rates on the 30-year US government bonds. So this is in terms of price, but what I want is the interest rate, but whatever. Just keep in mind that the price of a bond is negatively correlated to the evolution of the interest rate. So basically, when the interest rate of the bond go higher, the price of the bonds goes lower, and vice versa. What we've seen in the previous trading session is the highest point we've ever seen on the bond market since ever, I think. So that's crazy. The market is very tense right now, and it's trying to find safe havens, and it found safe havens with the bonds. So we had a lot of volume and a lot of cash coming into this type of asset. If you look at the prices of gold, also, let me show you the price of gold, just bullish and skyrocket. So as you can see here, there is buyers, there is sellers, but the trend is up, and gold is basically an asset that is used to hedge your cash against inflation. And the price of gold is just going up. Okay, it's just going up and up and up. So people are just basically protecting their cash against inflation, because they don't know what will happen with global central banks that are just throwing money to support the economy, that are maybe will print money. We don't know yet. For now, they're just lowering the interest rate. But if it's not enough, and I think that it will not be enough, they would have to launch, for example, in the eurozone, the LTRO plan, so long-term refinancing operations. So those are basically operations to give cash to the banks. They could also launch some quantitative easing plans. We don't know. So if they in cash, the money will just devaluate itself. So gold is a good mean to hedge against the inflation, and this is maybe something that will rise and will gain momentum in the next, I'll say, in the next few months. All right, so that's definitely something that you should look at. Gold, basically buying gold, being neutral on the stock market, waiting for the central banks to move and hedge against the inflation is right now the one of the smartest move, I think. And yeah, that's it, guys. So basically, you understand my points. We gotta be we gotta be cautious right now. We can select some good, interesting stock. We have a first discounted price on the stock market, but we can also have better prices. So I think that we should keep that in mind. We see each other tomorrow for last peep show of the week, and I wish you good luck on the market and take care.